Morning traders, going to give you guys a market update and my current positions for the 11th of May 2012. So let's give a little rundown what's happened over the last few days in the equity market first. As you can see, we've basically been just ranging here. As you know, last week on Friday I turned bearish and I wrote it down to about 1345, which I covered my shorts on the S&P. And you can see in the last 5 days, we've wicked down below that 1350 level, and every single time we found a buyer. So I actually did get long this day right over here. I started getting long after we punctured the 1340 and came back to the 1345 area. I started getting long. I also got long a bit more on the open of yesterday, and so I'm basically risk on right now, and I'm looking for equity markets to push. You can see this was the drop we saw after JP Morgan's trading loss that Jamie Dimon, CEO of JP Morgan, basically said that the CIO, part of the firm, lost $2 billion dealing in what was supposed to be hedging activities for their other positions in credit default swaps. And you can see that we had a negative reaction, and I think that was kind of a buying opportunity because, although it may be a hit to the banking sector and the financial sector, I do believe that that most of the other sectors in the market have been relatively strong, and you can see that's why we've been holding up. So not really a macro trade, although it's starting to turn into one, this long position, as today we got better consumer sentiment from the Michigan sentiment. We got 77.8 versus 76.4, I believe was the number expected, and so we're rallying off that as well. So I'm along the S&P. I'm also along the Nasdaq for some technology risk, which has been performing a little better than the S&P in the last few days, except for yesterday we did see some negative activity. And then I'm also along a bit of oil, as I just believe we should see a bounce in the next coming days. This is more of a managed futures trade. I just believe it's very oversold and it needs to pull in, and then I'd like to lock some profits in that. So I'm looking for equity markets to rally. I'm looking for oil to rally. Let's take a look at some other markets. Gold has been selling off, as the euro has also been selling off. The US dollar has been rallying. We broke below the 1600 level, and I'm trying to find a base. I did play some longs, managed futures longs 3 days ago. Took it out yesterday. Sorry, 2 days ago. Took it out yesterday. Copper is trying to base again over here in this $3.60 level. And then once again, looking back at the euro, we broke through this descending triangle. However, we are holding up, and the bond market is continuing to rally as global fears push investors into the bond market, although they are yielding very low rates. So that's basically, I think, the market we got right now. Bond market is always going to see some strength because of the Fed and just global fears, so we should see continued strength in the bond market, or at least them holding up. And the equity market is going to be a little more reactive, obviously, and we should see more whipsaw action as the market tries to decide whether we are going in a soft patch in the U.S. economy, which the previous jobs report may have indicated, or are we stabilizing as this Michigan highest number in the last 4 years sentiment number was, indicating some upside right there. So also the Canadian dollar is up, which is on the unemployment numbers in Canada, which is also a good sign. So all in all, not a very heavy trade I have in equities, but I do believe we should see a rally.